Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Doubling down, Asian stocks decline after President Trump says he will hike tariffs on steel and aluminium to 50%, while Beijing accuses Washington of breaking their trade truce. Crude climbs, oil rallies on geopolitical risks, even as OPEC Plus hikes output for a third month running. Goldman Sachs now expects another production increase in August. And escalating conflict. Ukraine strikes military targets deep inside Russia, while Moscow stages one of its longest attacks against Kyiv, all ahead of crucial peace talks due to resume today. Well, it has just gone 8 a.m. across the Emirates, everybody. I'm Joanna Versace in Dubai. Happy Monday. It's going to be a shortened trading week over here in the region, of course, with the Eid coming up towards the end of the week. And once again, tariffs are setting the tone. You can see behind me a lot of red on the screen. The handover from Asia Pacific down 1%. Shanghai market is closed, but the Hang Seng index down almost 2.5% there. Once again, a war of words between China and U.S., with the U.S. accusing China of violating that Geneva Agreement, in addition to property stocks once again moving to the forefront. So we have a specific property developer in Hong Kong that has missed interest payments on one of its bonds. That's also set the tone over there. So handover from Asia, pretty weak this morning. But as you can see, stock futures, the S&P futures down 0.5% as well. We're heading into a big week in terms of data. We've got ISM manufacturing data, services, and non-farm payrolls to watch out for by the end of this week. But still tracking positive year to date, marginally positive for the S&P, with about half of the gains since April fueled by the rally that we've seen in Magnificent Seven. So once again, concentration in tech stocks. USD not doing a lot this morning, slipping a little bit, down about 4 basis points, though still the market tends to be or continues to be quite bearish on the outlook for the greenback in the coming months. And then Brent, take a look at the energy complex. Despite another increase in production out of OPEC Plus, more than 400,000 barrels a day to hit the market come July, we are seeing a jump in energy prices this morning, up 2.3%. By the rumor, sell the fact. It had been expected. Also keeping an eye on geopolitical developments with, once again, a deepening of attacks between Ukraine and Russia over the last 24 hours. Now, back to tariffs. China has accused the U.S. of violating their recent trade deal, promising to take measures to defend its own interests. That's after President Trump accused Beijing of breaching the Geneva deal, while also doubling tariffs on steel and aluminium imports to 50%. For more, let's bring in Bloomberg's Brian Fowler. Brian, first of all, let's just talk about the, once again, surprise increase in the tariffs on steel and aluminium. What is the objective? Why did the Trump administration decide to double down, quite literally in this case, on steel and aluminium?
Yeah, I think there are a few incentives for Trump to do that at this juncture. I mean, the first one is obviously wanting to speak to U.S. steel employees and send a positive message about protecting U.S. jobs. And it also gives Nippon Steel an added incentive to make that $14 billion investment in U.S. steel as it seeks to get away from the duties. But I think another factor is Trump wanting to maintain leverage in deals. We had that court ruling last week, the trade court pushing back against some of the Trump duties, but that ruling did not affect the duties on steel and aluminum. So that's an area where Trump really can still maintain a free hand. As he nears deals with lots of other countries, including Japan, I think he wants to boost his leverage to the maximum point so that he can ensure he gets a good deal and gets a deal to stick. As you mentioned, we just saw tensions between Washington and Beijing rise in the last few days, with both sides accusing the other of violating their deal. So I think Trump was eager to send a message showing his strength in these tariff negotiations.
Right. And in terms of who in Asia is going to get hit the most, I saw an interesting piece by Bloomberg Intelligence suggesting that South Korean steelmakers could get hit. The U.S. took about 10% of the country's steel exports before these tariffs were applied. How much of an economic impact are we expecting among steelmakers in the region?
Yeah, I think South Korea is at the top of the list among those who could get hit. We saw South Korean steel exports fall about 19% back in March when the tariff was only 25%. So I think maybe that could worsen as we go forward. We saw just today we had PMIs from a whole bunch of countries around the region. They all looked a little bit grim, showing that business activity was contracting. Another data point, we had CapEx figures for Japan for the first quarter, and the numbers looked pretty good overall. And one of the bright spots was the steel industry boosting investment and capacity as it seeks to meet growing demand from automakers for steel plates. But of course, that could be easily set back if the steel duty is going to be raised to 50%. So it's widespread. I think all of Asia is concerned about this. And I mean, the full extent of the impact remains to be seen, but it's definitely a negative.
Yeah. Well, and it's also set the tone for trading this week. Bloomberg's Brian Fowler, thank you so much. Well, Asian shares are lower, along with U.S. futures, as the trade tensions are dialing up, prompting investors to hold back on taking risky bets. Joining us now is Khaled Hobballah, Senior Country Officer of MENA and Head of Global Markets, MENA and Turkey at JPMorgan. Good to have you with us, Khaled.
Thanks for having me today.
Given how much uncertainty there is around tariffs, and one day it's good news, one day it's bad news, and again, the theme is one of uncertainty about the path ahead, how is that impacting how you're thinking about the growth outlook for the region here?
Well, thank you again for having me, Romana. I think the impact of tariffs is going to be indirect in the region, except perhaps for some of the countries that are aluminium exporters. Having said that, you'll notice that most of the trade that this region does is with China and Europe. I think the secondary impact is really oil prices ultimately. And with oil prices dropping, then you'll have perhaps a bit more pressure on the fiscal side as well as current account. You notice also that, in the EU, let me talk perhaps about the two largest economies. In the EU, you have twin surplus, so I think they will continue to weather very well any sort of repercussions.
Yeah.
But having said that, all the region is going to be vulnerable to any sort of recessionary forces globally, and that obviously could be a big risk for the world. In Saudi Arabia, as you notice, they've got a twin deficit, current account as well as fiscal, but that's really because of the substantial spending that the government is doing in order to achieve Vision 2030. Having said that, Saudi has ample fiscal buffers and FX reserves. They also have great access to international debt capital markets. You've seen probably Aramco issuance was heavily subscribed, $5 billion. And they're still within really the self-imposed cap of 40% debt to GDP. So there's still room to maneuver. And I think that His Excellency Prime Minister of Finance, Al-Jad'an, actually said it very well that they want the spending to be counter-cyclical in order to continue actually focusing and investing on the projects that will prioritize non-oil economy.
Okay, so let's talk a bit more about that. But, Tadawul, I was taking a look at the stock market index there. It is the worst performing index in the region. Most of the others in Dubai, Abu Dhabi, Qatar, they've pretty much recuperated the losses seen since April, but not the case for Tadawul. Do you think that is a reflection of investor hesitation to invest because of the backdrop of lower oil prices and the twin deficit that you spoke about?
It's a bit of everything, really. And I think, global emerging market funds usually, buy, let's say, EM equities at 12 times multiple, PE multiple on a 12 months forward basis. And you've noticed that actually Saudi Arabia actually prices at 15 times PE multiple. Now, at the same time, Saudi Arabia is not really like any emerging market equity index. Saudi Arabia has got a great story, a change that is once in a century, basically. So the expectations are that even with a higher PE, you will still have that sort of investments coming into the region. Now, having said that, obviously with oil prices where they're going to be, we forecast oil prices to drop 10%. They're at 66 for this year, 58 for 2026. Obviously, that will have an impact, but hopefully that impact is not going to be pronounced given what I said about the fiscal buffers.
Yeah, so presumably the expectation is we are going to have to see more bond issuance, both at sovereign level and at corporate level. From conversations that you're having with investors, do you feel like the clearing price has to move higher to account for all of this extra issuance to come?
Well, basically, I think that there is a very strong international demand still for Middle East paper, for Saudi, UAE, but also obviously Qatar and various other parts of the region. So that bit is going to stay there. I think that the dynamics still in the region makes it actually a compelling destination for capital. Again, there the region is probably better equipped than most other regions to weather the headwinds that we're seeing in the markets. So I will continue to see a robust demand on the international debt capital markets. On the equity capital markets as well, there is a large, substantial IPO pipeline, whether in UAE or in Saudi Arabia. And I think for the right transaction, there'll be a robust demand again.
Yeah, so both on DCM and on ECM, you're expecting a robust outlook.
Yeah.
How does that, on ECM specifically, I'm guessing you're also seeing a broadening out in terms of the sectors and the industries that are coming to market?
Absolutely.
Yeah.
I think there is obviously consensus here that, there are more sectors or more companies that need to come to the market here in the UAE, but also in Saudi Arabia, where obviously liquidity and depth and the institutionalization of the investor base is happening. As you know, you have, some of the largest asset managers that have, set up base in Saudi and here, and they've been sort of constructing, portfolio strategies that are really regional and local. So as we see more and more of these institutionalization, I think you'll see more of companies sort of being encouraged to IPO.
Yeah.
At the same time, putting aside IPO market, as you know, you have a lot of financial sponsors and private equity as well, firms that have established shop here, and they see the opportunities in the private markets, whether credit or equity, and that will continue to be the case.
Khaled, you've been in the region for a really long time. What would you say is the biggest evolution that you've seen in terms of local capital markets?
In the local capital markets, I think that there's been a substantial change, whether in the DCMs or local debt capital markets in Saudi Arabia. Obviously, JPMorgan is one of the primary dealers there. I think there's a substantial effort by the Saudis to make sure that there is enough liquidity in that system in order to attract international investors. There's a lot of work that is being done, and that will actually create also a very large local debt capital markets, which will complement, obviously, the international debt capital markets issuance. So Saudi Arabia is really looking at all sorts of alternative financing, including also multilateral, ECA. So that will continue to be the case. I see the same thing happening here in the UAE or even in Qatar. There is that consensus that, debt capital markets, but also equity needs to be liberalized in order to attract more funding, more FDI. And we see that trend going on.
Yeah, moving in the right direction. Yeah. Khaled, always good to talk to you.
Thanks
so much for coming on our show. That was Khaled Hobballah, Senior Country Officer of MENA and Head of Global Markets, MENA and Turkey at JPMorgan. Now, a nationalist candidate backed by Donald Trump has won Poland's presidential election, defeating the centrist mayor of Warsaw in a blow to the country's pro-EU government. Conservative historian and former boxer Karol Nawrocki won 50.9% of the votes, according to Bloomberg News calculations based on data from the Electoral Commission. The result is likely to determine whether Poland remains a reliable partner in the EU and NATO, which faces mounting pressure from Trump's tariffs and Russia's threat to the east. And coming up, OPEC Plus agrees to increase oil output for the third month in a row, doubling down on a policy shift. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. OPEC Plus has agreed to increase oil output by 411,000 barrels a day in July, despite reservations from member nations, including Russia. The move marks a historic policy shift to drive crude prices even lower, potentially. But for more, let's bring in Bloomberg's Anthony DePaola. Well, despite the increase in production of 411,000 barrels a day, we're actually seeing oil prices trend higher this morning. What do we put that down to?
Yeah, well, this is a market where there's a lot of other stuff going on, of course, beyond just the OPEC increase. The OPEC increase was expected. That's what we had in our forecast going into the week, that they would try to make this larger than planned increase. You remember they announced a plan to boost production by about 100,000 barrels a day. But for the last 3 months now, OPEC has been doing these 400,000 plus increases. There was some speculation at the end of last week going into that meeting that OPEC might even try to do a little bit more. And part of what we're seeing is the fundamental aspect of the market now, which is really okay in the sense that there is still demand for crude, there's still demand for products. We're going into that summer driving season in the U.S., a big air conditioning and oil burning season here in the Gulf in the summer. So we are going into a higher demand period. So traders are seeing the market pretty good right now. It's the concern later in the year.
After the summer.
Exactly. And we don't have crude going into storage yet, which is one of those big factors that OPEC Plus watches when they decide whether to put oil back in the market. So they want to take advantage of this window to gain back some market share before the market weakens.
And you and I have been talking about the existing backdrop of low inventories, which is in contrast to several years ago, obviously. And then it was interesting to see the language. OPEC once again reaffirming commitment to market stability on current, what they say, healthy oil market fundamentals and a steady global economic outlook. Does that mean then we could get one more big production increase at the July meeting, and that takes us to August, and then that's it? Or what is the street expecting now?
Yeah, it's possible we could get that in terms of OPEC Plus wanting to really unwind what are these voluntary cuts, wanting to unwind those voluntary cuts sooner rather than later. And then they've got a base cut that the whole group together has agreed to that would come out of the market more slowly. But it seems like they are trying to get that oil back in the market, as I said, kind of in that window where demand is still good before the inventories are too high. And we are seeing what's keeping oil high at the moment is all that other geopolitical uncertainty. Again, issues around the economy, around tariffs, geopolitics as well. But we may see some of that weighing on the oil price later in the year if the economy weakens and if we do see some of that oil start to build up.
I saw our Bloomberg intelligence colleagues have put out a forecast of $40. When is that? By the end of this year. So there's a lot of bearishness out there from the intelligence community. Thank you so much, Anthony. Great to have you with us on the show as ever. Bloomberg's Anthony DePaula. Well, Iran has rejected a UN nuclear watchdog report accusing it of nuclear violations, claiming the agency is motivated by politics. The report says Iran has expanded its stockpile of near weapons-grade uranium and failed to report nuclear material and activities at 3 locations. Iran says the findings are based on fabricated data, that's a quote, and repeated that it's not seeing atomic weapons. Coming up, the U.S. calls the Hamas response to its truce proposal totally unacceptable. We discuss the differences between the two sides next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersacci in Dubai. The U.S. says the Hamas response to its latest truce plan is, quote, totally unacceptable. U.S. envoy Steve Witkoff says Hamas should accept the framework proposal the Trump administration put forward, adding that further talks could begin this week. For more, we're joined by Bloomberg's Dan Williams in Jerusalem. Dan, I think it's important to note that vis-a-vis this latest proposal, the U.S. are saying that Israel has already signed off on it. So what do we know about what is in the proposal and what Hamas's pushback has been?
Well, I think the dispute here is much as it has been previously in ceasefire talks, the difference being that we're now almost 20 months into this war. Israel is now threatening to take over the entire Gaza Strip, to destroy physically Hamas and potentially rescue or put at risk the remaining hostages there. The crux of this dispute is that Hamas wants a guarantee that it will remain standing at the end of any deal that concludes this war. Israel does not want that. Israel has said from the outset this war will conclude with Hamas dismantled and its leaders exiled. Hamas apparently wanted some kind of end-of-war guarantee as to its own status from the Americans. It did not accept the proposal. It issued a counter-proposal. And as you noted, the Americans are not happy with that. It appears this has not closed the door in the talks. But I can tell you, I'm 50 kilometers away from the Gaza Strip. Almost on an hourly basis, we can hear the rumble of explosions there. So it would appear that as Hamas is still willing to re-enter those talks, the Israelis are continuing to apply the military pressure. And overnight, we are hearing of several people being injured, 6 people per the latest, in an attack in Colorado, another act of violence. And this was around the time that a demonstration was being held in support of Israeli hostages. What do we know about the events that have unfolded overnight in Colorado? Authorities are describing this as a hate crime, an anti-Semitic hate crime. The targets were apparently people, members of the Jewish community there, taking part in a solidarity march for those remaining 58 hostages held in the Gaza Strip. According to authorities there, a suspect, a man yelling "Free Palestine," which is the rallying cry for anti-Israel protesters, pro-Palestinian protesters, at times pro-Hamas protesters, attacked them with incendiary devices, wounding 6 people. This is something that will certainly be alarming many Americans, many American Jews. It comes days after 2 staffers at the Israeli embassy in Washington were shot by a man shouting the same rallying cry of "Free, Free Palestine." So it's something that really shows the degree to which this conflict in the Middle East has lapped up into American public opinion, polarizing opinion there, and really worrying people at the other side of the world.
Yes, thank you, Dan Williams, for the reporting there. Now for a look at some of the other stories we're following today. U.S. Defense Secretary Pete Hegseth has reassured allies in Asia that Washington remains committed to countering China in the region. Speaking at the annual Shangri-La Dialogue in Singapore, he also urged higher defense spending.
NATO members are pledging to spend 5% of their GDP on defense, even Germany. So it doesn't make sense for countries in Europe to do that while key allies in Asia spend less on defense in the face of an even more formidable threat, not to mention North Korea.
And our colleague Hazinda Amin also spoke to other defense chiefs who responded to Hegseth's comments.
We are increasing our defence capability in a historic way, but so many other countries are moving down that path as well. It's also why we are very much building our relationships within the region, but it's also why, in terms of the United States, we are keen to see a US which is focused on our region, and we're very keen to work with them.
I agree with Secretary Hegseth's call that defense spending must be increased, particularly in the Philippines.
To the tune of 5% of GDP?
No, we really cannot afford 5%. And it's relative to the capacity of a country. I think, look, for example, New Zealand, they will increase to 2% after 8 years because that's their capacity. In the Philippines, we have a lesser capacity, but we must increase.
Some of the takeaways from the Shangri-La Dialogue that Hazinda Amin has been covering over the course of the weekend. But take a look at markets today. Negative across the board. S&P futures down 0.4%. We have the Nasdaq down 0.6%. Though we've also witnessed quite a strong comeback for many of those big tech stocks. So the rebound, or half of the rebound since April, can be attributed back to those magnificent 7 stocks. European futures as well down 0.3%. As we look to a busy week in terms of data and the U.S. ISM numbers coming up, non-farm payrolls on Friday, and then, of course, the ECB meeting on Thursday, and all eyes on whether they will go for another interest rate cut. But we'll talk more about markets. And coming up, Japan tells its companies to grow their businesses in Africa. We'll look at what's driving the investment push. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Doubling down, Asian stocks decline after President Trump says he will hike tariffs on steel and aluminium to 50%, while Beijing accuses Washington of breaking their trade truce. Crude climbs, oil rallies on geopolitical risks, even as OPEC Plus hikes output for a 3rd month running. Goldman Sachs now expects another production increase in August. And escalating conflict. Ukraine strikes military targets deep inside Russia, while Moscow stages one of its longest attacks against Kyiv, all ahead of crucial peace talks due to resume later today. Well, it has just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. A lot of red on the board behind me as we kick off the week. The handover from Asian stocks, pretty negative. The Asia-Pacific index down 0.9%. China is out today. Well, the Shanghai index not trading, but the Hong Kong Hang Seng index is down 2.5%. Also, some eyes on property stocks there as well. So that's setting the tone. In addition to the latest salvo with President Trump announcing yet another increase of steel and aluminium tariffs. They're now being lifted up to 50% from 25%, and accusing China of violating the Geneva Agreement from a couple of weeks ago. So the language around tariffs, not very positive. S&P futures down 0.4%. The USD slipping a little bit. We're down 6 basis points today in trading. And then energy up 2.4%. This despite the fact that OPEC Plus announced that they're increasing daily production of output by 411,000 barrels a day come July. It's third increase in a row, sizable increase. And yet the reaction is positive today in markets because OPEC Plus isn't the only driver. Investors also keeping a close eye on geopolitical developments, and we are going to talk about them in a moment. So oil complex up 2.4%. But as for those geopolitical developments that I'm referring to, Ukraine has carried out strikes deep into Russia as Moscow launched a heavy attack of its own against Kyiv. The escalation comes ahead of a second round of peace talks scheduled for Monday in Istanbul. Germany and Sweden are raising support for Ukraine's defense. Their defense officials spoke to Bloomberg's Haslinda Amin at the Shangri-La Dialogue in Singapore.
Recently, we brought in €4 billion for an additional package. This is mainly to strengthen the Ukraine defense industry so that it's self-sustaining also for the future. So we are basically building a bridge from support nowadays into the future as well.
Right now, they don't really have the assets to pose a military threat to us. But once there is an arms tryst or there is a peace deal, they're going to be moving their assets and capabilities closer to our vicinity, of course. The Russians are adopting, and our response to that is, of course, that they're investing into our own defense capabilities and investing into NATO as well, to make sure that NATO can deter and defend every inch of Allied territory.
Well, Bloomberg senior editor Bill Ferries is with us. Let's go back to those Ukrainian attacks on strategic assets in Russia. Pretty impressive operation, I've got to say, but also pretty dramatic as well, with many of the drones that Ukraine use actually hidden and embedded in trucks. They went as far as eastern Siberia. What do we know about this attack, Bill?
Yeah, a very audacious attack by Ukraine. President Zelensky said more than 100 drones were deployed. They emerged from these container trucks and went after Russian air bases, as you said, from the Far East up to the north near the border with Finland, and at certain facilities near Moscow as well. We believe there have been dozens of Russian planes destroyed, but that includes some their long-range strategic bombers, and those are the kinds of planes that carry both conventional and potentially nuclear weapons. So a big blow against Russia's Air Force. Of course, Russia hasn't been idle. They've been hitting Ukraine over the last 10 days or so with some of their biggest drone barrages since the start of the war. So both sides kind of escalating things, heading into what were expected to be peace discussions in Turkey that should be starting later today. I think these attacks are going to loom over all those discussions and perhaps limit what can be accomplished there.
Well, I was going to say, looking ahead to today's talks, what do we know about who's attending? Because obviously that gives you an inclination as to whether both sides are serious, and to how the events over the past weekend will loom large over any potential progress.
Yeah, so it's important to remember these are the second set of talks in Turkey since the first round last month. Those negotiations didn't really have a big breakthrough, but they did allow for a prisoner exchange. I think more than 1,000 prisoners on each side were freed in that. Ukraine heads into these talks. They've traditionally sent a higher-level delegation than the Russians have. Ukraine heads into it asking for Russia to provide more detailed information on what they would like to see happen to achieve a ceasefire. Ukraine has repeatedly said they're ready for an unconditional ceasefire beginning immediately. Russia has not responded in kind to that. So unless there is some kind of a breakthrough, you might see a little more accomplishments taking place on the edges with prisoner releases. But a major breakthrough, given what we saw this weekend, is probably less likely.
Yeah. Bloomberg senior editor Bill Ferries, thank you so much for the reporting there. Now, Japan says it is supporting its companies to grow and invest in Africa as it tries to reduce its reliance on China. For more, Bloomberg's Ndiro Ganga joins us from Kigali. So this is interesting, Ndiro, because we tend to assume that the Asian investment coming into the African continent is coming from China, but Japan have now also set its sights on investing in the continent. Tell us more.
Hi, Jumana, you're absolutely correct. And if you look at Japan and the investment on the African continent, it was mainly aid. And though there's nothing wrong with being a part of helping the continent get out of the different crises that hit it, there's so much potential that is bursting out of Africa. 54 countries, demographic dividend. There's a lot of critical and rare earth minerals on the African continent. And also, if you look at the region, it offers some of the highest returns when it comes to investment. If you also look at Japan individually, they're just coming out of a period of deflation that has lasted for decades. And though the government is yet to officially announce the end of the deflation process, inflation for the last 3 consecutive years has been above the central bank target of 2%. And we're now seeing that Japanese investors who are very risk averse are beginning to look at alternative markets like Africa. Traditionally, they go for markets like the US and the UK, and that's where their net external assets hit a record high in 2024. But if you look at Africa, only 0.5% of that trickled down to the continent, signaling that there's room to do more. And it comes at a time where the continent is trying to recalibrate some of its relations globally. We are seeing the US significantly scaling back on aid. UK is following that direction. But Japan is a country that has been consistently but very minimally investing on the African continent. They want to do more, and they haven't expressed any interest in scaling back their aid. And that gives them a really great foundation to start building up these relations.
And how much investment has Japan actually made into Africa so far?
Joanna, there have been pockets of investment. If you look at Kenya, they have a significant and competitive advantage when it comes to areas like energy. Geothermal turbines in Kenya, 90% of them are produced in Japan, with Mitsubishi leading that part. But they are also now targeting other areas of investment. They're looking at critical minerals. They're looking at rare earth minerals, base minerals. And Japanese Trading House was one of the leading bidders for a Zambian copper mine, according to a Bloomberg report. And now they're also targeting projects in hydrogen. The South African energy minister in 2024 was trying to woo Japanese investors to go into the country and invest. And like you mentioned in the intro, the goal here is to reduce their over-reliance on China, not to say that working with China is a bad thing, but they also want to dip their foot in the water. And they're now joining the race. They're joining the U.S. countries in the Far East, in the Middle East, in the race for critical minerals on the African continent. These are minerals that are not only powering economies and industries of today, but also that of tomorrow, and it will do them well to set themselves up on the continent as other people are also trying to get their place and solidify their influence.
Bloomberg's Ndiro Ganga in Kigali, Rwanda. Thank you so much for the report. And coming up, we discuss the global travel demand and the impact of tariffs with the CEO of Pegasus Airlines. We're live in New Delhi next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. IATA's 81st AGM and World Air Transport Summit kicked off yesterday in New Delhi. This year's agenda zeroes in on rising tariff threats and airspace safety. Director General Willie Walsh told us that declining oil prices should help offset any weakening demand or slowdown due to tariffs. But for the time being, he sees aviation demand to stay strong.
Well, when I look at things, I think some of these events that we're seeing at the moment are short-term in nature. And therefore, they're not going to have a long-term impact on the growth of the industry. What I believe is that the demand for aviation, demand for flying remains strong, and that will continue.
Opening trade anchor Guy Johnson is at the gathering and joins us with a guest. Guy, really enjoying your interviews this morning, and you're bringing us another one on Horizons now.
Joanna, yep, I am. Thank you very much indeed. Nice to see you too. Güliz Öztürk is the CEO of Pegasus, the Turkish low-cost carrier. Just placed a very substantial order for Boeing aircraft. We'll talk about that in just a moment. I want to kick off the conversation though. Good morning, by the way.
Good morning.
What's the demand story looking like right now? What kind of demand are you seeing? Do you see any cracks in the consumer? What does the summer look like? What's the picture?
We already left 5 months behind us, and we have disclosed our first 4 months traffic results, and the first 4 months also had a strong demand, which we had about 14% this year.
Yep.
And this is on top of last year's 30% growth, because last year we had grown about 30%. So we may say, especially the Easter period, April, we had a good demand and we had a strong result.
Yep.
So when we look into the summer, from the day we are right now, if everything goes as we expect, and we don't see any other thing coming up, then we see that the forward bookings are going positively. I mean, we don't see any downturn. Lots of in U.S. recessions and demand downturn is discussed a lot, I know, but we don't expect such kind of a downturn on the demand. So last summer was a strong one. We expect.
Do you think this summer is better than last summer?
I may say comparable about that. Yeah, similar.
Okay, I was talking to Michael O'Leary the other day. He was saying he thinks at Ryanair that people are going to stay in Europe more this summer. They're not going to travel long haul. They're going to stick to home. Do you think that's going to be a factor as well?
If that happens, that's good for us because we also, our network is composed of Europe, Middle East, CIS countries. Of course, I mean, that depends more on the affordability, on the fares, what they want to pay for it. But I mean, what's good is that people will travel.
Okay.
I mean,
you talk about fuel. You hedge, obviously, your fuel.
Yeah, we do.
Fuel's come down quite a lot. Yeah. Does that mean you can pass that on to the consumer fairly quickly? How quickly can that work? Because obviously, lower fares stimulates demand.
That's true, and that's also the business model we have, low-cost, low-fare business model. Now, as long as you anticipate the future of the fuel prices, I mean, it's so volatile. Let's talk, I mean, let's think 2 months ago, 3 months ago, where we were and where we are now. As long as we see a kind of a continuity on that, then it takes about 2 to 3 months to 6 months to pass it on.
Yep.
The problem is that you cannot foresee what will come next.
Yep.
So we are hedged by 60% this year, and for next year even we are hedged at 40%, but that's always good because it's the main cost item for the airline. So as long as the fuel prices are going down or at this level, then of course the customer will benefit from this.
You surprised us all. We all thought you were going to be an Airbus customer, that you were going to be all Airbus.
We are an Airbus customer.
You are an Airbus customer. You're going to be all Airbus, but you're not going to be. You're going to be a Boeing customer as well. Is that an easy decision? Kind of, how did that happen? How did it come about? You've ordered the MAX 10, which is the kind of the biggest version of that aircraft type. It's not even certified yet. How much confidence did you have to make that decision to go with Boeing?
Good question, because it wasn't an easy decision. Because let me put it this way. I mean, either you order from Airbus or from Boeing, such big orders are always the most difficult decision for an airline. Why? Because you, in a way, make an endorsement for the future 10 to 15 years of an airline.
Yep.
So it's really one of the most critical decisions. For us, yes, we were a Boeing operator since until 2016, and then we had placed an order for Airbus. So the first Airbus came into our fleet in 2016. So since then, like about 9 years now, we're operating dual aircraft type within the fleet. So Boeing decision, or the new order decision, it took about 14 months for us to work on it. So it was really a detailed, very comprehensive analysis. And as a result, like we discussed with the two manufacturers, we decided to have a dual fleet strategy afterwards. So it will not be a transformation. We'll keep 2 types of aircraft in our fleet. We will have another 50 aircraft from Airbus still until 2029. And the first Boeings will come in 2028. We have the confidence that the certification will be completed by the end of this year.
Yep.
But we have still 3 years to go. Even if there's a slight change in the timings, we can manage that. So, and this order, with the options, if we exercise, will take us until 2039.
Just wrap things up. Jumana was just talking about the attacks that we've seen overnight, Ukrainian attacks into Russia. You fly into Russia. You fly into a number of destinations in Russia.
2 destinations.
Moscow, and St. Petersburg. When you see what's going on right now, does it make you rethink? Are you constantly reevaluating the efficacy of flying into Russia? Like how finally a balanced decision is it? And if the situation deteriorates, are you going to review that decision?
Exactly. That's a daily review, by the way, because it's both. I mean, the operational disruption. At the end, you take safety is the first, second, third priority in the airline business. So we operate to 2 destinations right now, and mainly Moscow flights are affected. So it's a daily, even an hourly review, because the government or the CAA places some notifications and they close down the airspace and the airports. So, I mean, yes, we do have operational precautions beforehand during those flights, and as long as, let's say, we see it safe to fly and operationally it's good to go, then we continue. Otherwise, we cancel.
The plan is to continue to fly to Moscow.
Of course, we will monitor the developments, and if we see that it's doable, then we will continue flying.
Güliz, nice to see you. Thank you very much indeed for stopping by to see us. We always appreciate your time. Thank you very much indeed. Güliz Öztürk, the CEO of Pegasus. Jumana from New Delhi, from the IATA AGM. I'll hand things back to you.
Yeah, super interesting to hear from Pegasus. Also a reminder that those peace talks between Russia and Ukraine are actually being held in Turkey. And interesting to note that Pegasus obviously do still fly into Russia as well. Guy, thank you so much for the coverage. I know you have a really busy day coming up as well. Looking forward to the rest of the interviews. Now, Bloomberg has learned that Emirates Airlines is in talks with SpaceX to fit the Starlink internet service on its jets. The deal could be a huge boost, with Emirates having one of the world's biggest airline fleets. But sources tell us the airline would need to find a workaround for Starlink to work over Russia and China. Meanwhile, Emirates President Tim Clark told us it's too early to tell whether tariffs will have an impact on prices.
They've got to just take stock and take a medium to long-term view as to what their costs are going to do, and then have a conversation with us as to what that may be. As far as we're concerned at the moment, they can absorb that. They need to absorb that until it gets to a point where it's not absorbable, if I can use that word. And then we have that conversation. But it's too early to engage and say your price is going up 10%, your price is going up 5%, etc.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. A nationalist candidate backed by Donald Trump, Karol Nawrocki, has won Poland's presidential election in a neck-and-neck race. Bloomberg's Oliver Crook joins us now from the capital, Warsaw. So this was a candidate who was actually backed by President Trump. What did these results mean for Poland, Ollie?
Yeah, so listen, this was a kind of election that came really down to the wire. It was decided by less than 1 percentage point in the sort of late hours last night and this morning, where we had the centrist candidate versus the sort of right-wing candidate that was backed by the Law and Justice Party, the party that ruled Poland for 8 years until 2023 when Donald Tusk came to power. And what this now means is that the president is not just sort of a figurehead here in Poland. So the president has a lot of powers in terms of vetoing legislation and initiatives by the prime minister. So this is going to likely cause quite a bit of deadlock and paralysis. This was the sort of hope that Donald Tusk could sort of consolidate his power and get some of his agenda through. And part of the reason that he did not, potentially his candidate didn't do so well in this election, is that there had been some difficulty getting these things through due to the presidential veto. So that is likely to endure and likely to continue. As far as the sort of Europeans are concerned, this also has sort of large implications at a time when the EU is sort of waging trade war against the United States, and having a candidate that is very sort of EU skeptical, stepping away from some of the initiatives of the sort of pro-European, pro-Brussels initiative is something that's going to resonate far beyond the borders of Poland.
Yeah, and we're keeping a close eye on developments, obviously, between Ukraine and Russia. What are the implications, as you were just talking about, beyond Poland, also for European politics and potentially for NATO as well, Ollie?
Yeah, so one of the issues that we've touched just there was in Brussels. Of course, Poland is playing a much larger starring role within Europe. Its economy is doing extremely well. It's expected to go 3.3% this year. It's been a staunch supporter of Ukraine. It is the first NATO member to be hitting 5% on defense spend and has been really urging other countries across Europe and across NATO to get those sort of spending numbers higher. Of course, on the issue of Ukraine, this is one of the countries where the far-right, right-wing candidate and the central candidate really do see more or less eye to eye. There is a sort of distinction here. Karol Nawrocki saying that basically that the line should be drawn that Ukraine should not be able to join NATO, whereas the centrist sort of counterpart was suggesting that they should be able to do that. But of course, you had the U.S. Homeland Security Secretary here in Poland just days after the first round of the election endorsing the right-wing candidate. This is another sort of example that we've seen of the MAGA movement, the Trump administration, coming in to domestic European politics and effectively endorsing a candidate, an endorsement which I wouldn't really say necessarily has a huge deal in terms of swaying the electorate, but it just shows you sort of how interested the Trump administration is in sort of pushing these right-wing candidates and creating more sort of disharmony within the EU at a time when the sort of EU unity is being tested in a radical way as it's dealing with this trade war. And this again will send another signal that that potentially you don't have quite as much support as Brussels would like to see at this time.
Yeah. Most definitely, and such a tight margin as well, as you were talking about, Ollie, down to around 1% or so. Oliver Crook in Warsaw this morning. Thank you. Well, wrapping up the show with a look at equity futures. A lot of red on the screen. The tone is set for the trading week. Lots of data to get through, though. But here is where we're at. S&P futures down 0.5%. European markets down 0.3. That's Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe.